Hi, guys, it's Stock Curry. And today we have to talk about the worst market manipulation that has occurred since 1869. On Tuesday, a major exchange stole $8 billion from traders in order to save a hedge fund. Now, we've seen market manipulation before. We saw when GME ran up and Citadel lost an extreme amount of money that Robinhood and other brokers actually switched to position close only because DTCC requested additional funds from them and they were unable to pay those funds. And that caused the price of GME to crater, which saved Citadel, even though the Melvin Capital and all of them still lost significant amounts of money. But what we saw happen today goes far beyond anything that happened with GME or AMC or any of the others. I want you to imagine for a second if you were trading GME and you were up massively, having made massive profits, and then all of a sudden the NASDAQ came out and said, you know what? We're going to cancel all of these trades. We're going to take all the money you made. We're going to take it from you and we're going to give it back to Melvin Capital. I want you to imagine for a second if that had happened. Well, that is exactly what just did happen on a different exchange. Let me explain. Let me get rid of this for you guys so I can show you what's happening. Now, we already know that we have massive inflation right now. In February, inflation rose 7.9%. And it wasn't just gas and food that went up, it was across the board. In fact, if we take a look at some of what happened, we can see that obviously energy prices were up, but gasoline actually came down a little bit. It wasn't as high as it was. It was food mainly that rose up. Airline fares, of course, rose. Major appliances rose. Uh, Rents have started to go up. Used vehicle sales are back up. The point is, the inflation is across the board. And not only is inflation across the board, but it's actually going to get worse before it gets better. Now, a lot of the reasons that we've seen things like food prices go up is because shipping costs have gone up. There's just supply chain shortages everywhere. And this is affecting not only the things that you and I would buy on a normal basis, but this is also affecting a lot of commodities. Commodities being generally your raw materials, things like your copper, your nickel, your platinum, your wheat, things that you and I wouldn't normally buy, but the raw materials that go into our manufacturing, that go into our food, that go into things like that. And what we're going to talk about today, very specifically, is nickel. What happened to the nickel markets on Tuesday? So, we already talked about how on Tuesday, the nickel markets halted trading. We know that nickel prices rose to $100,000. But digging into this a little further, the LME, or the London Metals Exchange, took it a step further and actually canceled deals. Let me show you a little bit of a chart, kind of explain what's going on here. So, before I get to the chart, I just want to kind of explain that, this is a 145-year-old exchange. Now, back in the 1990s, a trader tried to corner the copper market, and tin trading was halted for 5 years in the 1980s. As of today, trading in nickel remains halted since Tuesday. It's unknown how long trading will be halted. Now, what exactly happened? Well, a Chinese company called Xinjiang, and I apologize if I'm not saying this correctly, they were one of the world's top nickel producers, and they had been building a very large short position in nickel since last year. They were betting prices would fall. Well, as prices skyrocketed, Xinjiang bought a large amount of nickel to reduce those short bets. In other words, they started covering their short positions. And as they covered their short positions, that caused the price of nickel to go up. As the price of nickel went higher and higher and higher, the remaining short positions led to margin calls, and those margin calls led to altogether an $8 billion loss for this Tsingshan company. Tsingshan lost $8 billion in these trades. Okay, that's what actually ended up happening. Now the question is, what happened? Did they get bailed out by the Chinese government, like we saw a lot of U.S. companies get bailed out back in 2008? Did they get bailed out by brokers, like we saw with GME back in January of last year? What actually happened? Well, no, they did not get bailed out by the government. They didn't get bailed out by financial institutions, that is, the banks that had lent them the money. And they did not get bailed out by brokers. They got bailed out by the exchange itself, the London's Metal Exchange. What happened was the LME, or London's Metal Exchange, announced that all trades would be voided from midnight until 8:15 a.m. on Tuesday, when trading stopped. And in addition to that, the markets have been closed for several days now. Now, you may think, Scott, what do I care? I mean, we're talking about the London Metals Exchange. We're talking about nickel. We're talking about commodities. Like, I just trade stocks. Maybe I trade some crypto. What do I care about this nickel? The problem is, if this happened in nickel, it could happen in a US stock market very easily. So we really have to look at some of the moral issues that occurred and think about how that might look if it were to occur in the United States. So what I want to get into is sort of the history here and what actually happened. This is, by the way, the chart for nickel. And as you can see, the nickel prices were slowly rising over the past few months. And then on Tuesday, they skyrocketed. And then they just canceled all the trades, reversed them, and said, all right, all you traders who made a profit with this big price rise, we're going to take that money back from you. And you big hedge fund that lost $8 billion, here you go. Here's your money back. We're just giving you the money. We're going to take the money from the traders that profited. We're going to give you the money back in order to save you. They literally stole $8 billion from retail traders and others in order to bail out this hedge fund. Now, this is crazy, okay? Because the last time this happened, we say this was almost unprecedented. Okay, what's almost unprecedented is that the exchange decided to save the hedge fund with money taken from other traders who would otherwise be sitting on fat profits. By the way, guys, this is the Wall Street Journal reporting this. Now, they say almost unprecedented because it did happen one time before. A speculator dubbed the world's most hated man in America back in 1869. Let me blow this up so you guys can see this now that you see in the chart. So back in 1869, this guy bribed a senator as well as corrupt New York judges in order to delay settlement of his gold dealings so that he could avoid losses. Guys, this has not happened since 1869, and the last time it happened, it involved bribery and corrupt judges. So let's dig a little bit deeper because I really want to understand why the LME did this. Why did the LME jump in? Well, let me go back to this other article because there's a little hint here at the very bottom of this. A little side note, but it kind of explains everything. Oh, here it is. All right. The LME is owned by Hong Kong Exchanges and Clearing Ltd. Hong Kong Exchanges and Clearing Ltd. Let me pull up Google real fast and let's see who this company is. Here we are. The Hong Kong Exchanges and Clearing Ltd is a company that operates a range of equity, that's the keyword. Equity, if you don't know, is stocks, securities, okay? Same thing that you and I buy. Commodities, fixed income, and currency markets. Currency markets, by the way, includes cryptocurrency through its wholly owned subsidiaries, including the Stock Exchange of Hong Kong, the Hong Kong Futures Exchange, and the London Metals Exchange. They are headquartered in Hong Kong. So this is a Hong Kong company. The LME is a Hong Kong company. Despite its name, it's a Hong Kong company. And who did they bail out? Oh, yeah, that's right. They bailed out a Chinese company. Okay. So I'm not going to speculate. I'm not going to go any further than this. All right. I'm not trying to get a lawsuit. All I'm pointing out is this was a Hong Kong company that took $8 billion from traders in order to bail out a Chinese company. You can decide what you want to think about that. I'm not going to go any further, but those are the facts. Okay. The final thing I want to kind of go over, LME is not going to reopen on Friday. This market, the nickel market, is closed indefinitely. We don't know how long it's going to be closed. The problem right now is that the LME has to figure out what they're going to do. There's some major issues with the fact they took a bunch of money from traders and gave it to a hedge fund. There's some major issues with the fact that they are now closed and shut down. And how do futures contracts work? How do they even reopen? How do they rebuild the trust of the trading community? We don't know what's going to happen. But right now it's closed indefinitely. I don't think it's going to be closed 5 years like copper was in the 1980s, but it's possible. The point is the inflation that continues to go up and up and up, and the inflation that will continue to get worse and worse is affecting the markets in such a dire way that the markets themselves are literally collapsing. Hedge funds are collapsing. Short positions are collapsing. Institutions are apparently too big to fail. This is really a major problem that we have not seen since the 2008 financial crisis. 2008 was the last time that we saw these kinds of problems in the market, where the market themselves were failing to operate, where major banks and major hedge funds were collapsing. And this could end up getting worse before it gets better. As inflation continues to go higher, that's going to drive up oil prices. It's going to drive up gas prices. It's going to drive up wheat prices. It's going to drive up your metal prices. It's going to drive up prices across the board. Everything you buy on a day-to-day basis is going to get more and more expensive. And it's not getting better, like the Fed said. It's actually getting worse. The 7.9% rise that we just had, obviously the fastest pace since 1982. But to take it a little bit further, I want to look at the month over month, because Janet Yellen, who's the Treasury Secretary in the United States, has said that we're going to see another year in which 12-month inflation numbers remain uncomfortably high. She's saying that all of the things with, Russia, Ukraine obviously is exasperating inflation, but it starts to spiral out of control. And the problem is with oil near $130 a barrel, going up, nickel at $100,000, gold rising, all these problems, it's just going to continue to increase prices. More and more hedge funds are going to run into problems. More and more banks are going to start running out of money as they do margin calls, and the hedge funds aren't able to pay the banks back. And we are seeing the same problems we saw in 2008. Okay, guys, that really wraps up what I wanted to talk about. So I wanted to do a live video today because I knew that there were going to be a lot of questions. So, what I'm going to do now is going to go through your questions and we're going to discuss these and try to make sense of what just happened and what might end up happening in the future here. So, let me go ahead and pull up your questions and we will discuss. So, good morning to everybody who said good morning in the very beginning. Uh, Gas prices are going crazy. That's absolutely true. And yes, I know it's midnight in California right now, almost midnight. Uh, I felt like this was really important. I had to get this out to you guys, and we definitely needed to do a live video to figure this out. So, you say, same market BS as usual. Francisco, unfortunately, this is much worse than usual. This is the worst market manipulation in, uh, well, since 1869. I don't even, what is that, 150 years? This is much worse than usual, unfortunately. So not only is the market manipulation bad, it's actually getting worse. Yeah, absolutely. The markets are rigged. Uh, for for trades to be canceled, for retail traders to be told your profits are being given back to a hedge fund is, I mean, it has literally never happened before, ever in the history of any market. This is the first time this has ever happened. So rigged doesn't even begin to explain what just happened. Uh, no, Dub, I'm going way beyond. You're saying so. Don't trade on Hong Kong Stock Exchange. Well, the Hong Kong Stock Exchange, or in this case, the London Metal Exchange, uh, yeah. Let's talk about the Hong Kong Exchange real fast, and then I want to get back to the U.S. markets. So, a lot of, well, not a lot, some YouTubers are starting to promote trading on the Hong Kong Exchange because some really popular stocks are moving over to the Hong Kong Exchange. Neo, for example, just started trading on the Hong Kong Exchange. In addition to that, TikTok is over on the Hong Kong Exchange. So, and the problem is right now in the US, we have ADRs. ADRs, basically, if you want to buy Neo, you're not really buying Neo. You're buying what's called an ADR. Now, an ADR is an American Depository. And what that basically means is you're buying shares, not even in Neo, you're buying shares in a, uh, uh, drew a blank. You're buying shares in an offshore company, okay, that is completely unrelated. Cayman Islands. You're buying shares in the Cayman Islands, and the Cayman Islands have a bunch of contracts with Neo that do its best to try to make the price of that Cayman Islands company match the price of the Neo stock. And the whole thing is called a VIE. And the problem with this VIE ADR structure is you don't own anything. You literally own nothing. If Neo decided we're just going to delist from the US, you would get zero. So, in order to help prevent that and try to create a safer trading environment, a lot of these companies that are currently on the US are moving over to the Hong Kong exchange, Neo included. And so US companies are thinking about opening up an account like Interactive Brokers, for example. On Interactive Brokers, you can trade on the Hong Kong exchange. So people are thinking, okay, go to Interactive Brokers, open an account, and then I can trade on the Hong Kong exchange, which is fine. If you want to do that, I've got a link for Interactive Brokers in the description of the video. But certainly, if a Hong Kong exchange is going to decide that they're just going to cancel trades and give money back to a hedge fund, I don't think that's very safe. That certainly draws a lot of red flags to trading on the Hong Kong exchange. Now, getting back to the U.S. markets for a minute, the problem is it doesn't actually make anything better in the U.S. because we saw the market manipulation happen on GME and AMC back in last year, back in January. So, they made position close only where the price ran up and they're like, oh crap, the price is running up. We got to bail out our hedge fund that owns our broker. So let's just go ahead and make it position close only so that the price can only go down. It can't go up. It's impossible for it to go up. So yeah, we've got major market manipulation here in the US. I don't think Hong Kong is safe. Then again, I don't think the US markets are safe either. What I'm trying to say, and the point of this video is the manipulation we just saw on the London Metal Exchange could happen here in the US. It's very, very possible. You know, the United States exchanges have canceled trades before. They've done it. The US exchanges have. Now, in the past, the US exchanges have canceled trades, and it's been one of two conditions. Either one, there was a flash crash due to an algo trading computer that just went haywire and completely destroyed the market. And in that case, the exchange has canceled like 15 minutes of trades. And the other time it's happened here in the US is when somebody fat fingered a trade, where let's say they were trying to buy stock for $100 and they accidentally bought it at a price of say $100,000, something like that. In that case, they've canceled trades. But those are the only two times they've canceled trades. Regardless, in the US, the exchanges have canceled trades. They have returned money to traders before. So the fact that this happened on a Hong Kong exchange, on the London Metal Exchange, doesn't mean it can't happen in the US. It can happen in the US because it has happened in the US. So don't think you're safe by trading in the US. The same thing that just happened on Tuesday on the Hong Kong exchange can happen on the US exchange because it has happened before, just for different circumstances, just nothing to this degree, and not to, bail out one particular hedge fund, $8 billion. It's been like one trade here or there. Okay, let's keep going for a few others, because I want to talk about a few things. Are we talking about meme stocks? Well, not specifically this time, but certainly this has happened in the past on meme stocks. Okay, Joan says Chinese stocks are very risky right now. The potential of sanctions. Yes, that's absolutely correct. And that is why a lot of these Chinese stocks are starting to list on the Hong Kong exchange. Like I said, if you want to buy them on the Hong Kong exchange where they're going to be a lot less risky than using the US ADRs, you can do that with Interactive Brokers. But as we just saw, the same market manipulation that happened in the US last year is now happening on the Hong Kong exchange. You had a feeling today was rigged. Well, actually, it was Tuesday, but yeah, definitely rigged. Let's see. Yeah, so Neo is going down. A lot of people wanted to talk about Neo. A lot of people thought NIO would go up. The fact is, Neo and a lot of other Chinese stocks are dropping right now, and it has to do with fears of the delisting. It has to do with the fact that the relations between the U.S. and China are deteriorating. They're actually worse than they were under Trump, which is crazy because everybody thought Biden was going to make things a lot better. But now with the whole Russia-Ukraine war, the U.S.-China relations are actually worse. And so because of that, a lot of the Chinese stocks are dropping out of fears of delisting. So Neo and all of them, these are definitely ones you're going to want to stay away from. People are dumping these due to the current FUD that is taking place with Chinese stocks. Okay, let's just talk about everything else. You're waiting for MOAS. If you guys don't know what MOAS is, it's MOASS, mother of all short squeezes. The problem right now is with what we just saw, with what happened on the London Metal Exchange on Tuesday, with what we just saw happen in January last year, I am becoming far less convinced that a MOAS will actually happen. I think there's enough manipulation in the markets to keep one from ever occurring. So unfortunately, I have very low hope that MOAS will ever happen. Yes, let's keep going. If you didn't know what's on the screen right now, we're talking about NIO, which is a EV company in China. They're listed here in the US via ADR and VIE. All right, we'll talk about a few other things here. So another question is, how bad will the recession this time around be? It's really, really hard to say. A recession is still 12 to 18 months off. a lot can happen in the next 12 to 18 months. We're not going to get a recession starting until 2023, sometime between April and October. So it's really hard to say. A recession, keep in mind, is a paper idea, meaning it's a number on a sheet of paper. Sometimes recessions occur and you don't even know a recession happened, because a recession is just defined as GDP growth less than inflation. That's all a recession is. So if GDP growth is significantly high and and the country is doing really, really well and jobs are great, and it's just inflation is so high that it overshadows GDP growth, that could technically be a recession and we wouldn't even know a recession occurred. On the other hand, it could be a major recession like 2008. We're starting to see some of the cracks in the markets like we saw in 2008. Well, actually, no. We're starting to see some of the cracks in the markets like we saw towards the end of 2007. So towards the end of 2007, we started seeing some major issues in the markets. It didn't really crash the markets till 2008. So we're kind of in that period right now where we were in late 2007, where we're getting a lot of red flags. We're starting to see the markets collapse and not work right. And we don't know. I don't know how big the recession is going to be, but we'll find out next year, I guess. Um, so, yeah, I want to clarify something, Watson. It's not about Chinese platforms. This has to do with the brokers this time around. This actually has to do with the exchange itself. So an exchange is something like a NASDAQ or the Amex American Stock Exchange, certain cryptocurrency exchanges. Those are exchanges. A broker is what allows you to trade on an exchange. So, for example, Interactive Brokers allows you to trade on the Hong Kong exchange. So if the Hong Kong exchange does something, that has nothing to do with the broker or the platform. That has to do with the exchange. So I just want to clarify that. You're fine to trade on Chinese platforms, just a little bit of risk in trading on a Chinese or Hong Kong exchange. You're saying this only happens a lot in corrupt countries. Well, the problem right now is this is occurring in a worldwide market, a major worldwide market. Yeah, stick to American stocks. Certainly, this is the safest thing to do right now, but obviously, you're not completely safe, as we saw with GME and AMC last year. Okay, so just to clarify something on Interactive Brokers, if you want to buy certain things like penny stocks, you have to go into your permissions and you have to actually request permissions for it. I don't know if I still have all the screenshots for all that. Yeah, I don't. But basically, you have to go in and request. So if you go into your trading permissions, and then go to trading permissions, go to request permissions. And then for penny stocks, you need to add United States penny stocks. And then if you want Hong Kong, you can request that. If you want Canada, you can request that. And then if you want to trade things like inverse leverage ETFs, then I think you have to request like collateralized debt obligations or something. But you're going to have to go through and request all your different trading permissions. They're not automatic like they are in something like Webull. So a little more complicated, but definitely worth it if you're looking to trade penny stocks. Some people on Wall Street need to go to jail. Yeah, absolutely. Like I said, the last time we saw the manipulation that we just saw in the LME was in 1869. And at that time, there were bribes, there were corrupt politicians. So there's a good chance a lot of people are going to end up going to jail. We'll see what happens. Should you dump Neil? Look, I'm not a financial advisor. I just know based upon the chart that a lot of people are getting rid of it due to the current FUD surrounding Chinese stocks. Where can you currently buy Russian securities? The answer is you can't. So first of all, the Russian stock exchange is closed and has been for over a week now. And a lot of the Russian companies are sanctioned, meaning you can do a position close only, but you cannot buy those shares. So U.S. and European Union sanctions make it illegal to buy Russian securities at this time. So unfortunately, you cannot buy those. Let's see what other things you guys had to say or asked about. Okay, so here's another question. Does this make you shy away from Chinese stocks, NIO or even Tesla, since they do a lot of business in China? NIO down 12% yesterday, call option tomorrow. So we just talked about NIO. Just the general question, does this make me stay away from Chinese stocks? Yeah, absolutely. Guys, I've been staying away from Chinese stocks for months now. If you guys follow me on this channel, if you've been following me for a while, you know I haven't bought any Chinese stocks in quite a while because, yeah, I absolutely have been staying away from them due to all of the issues surrounding them. Now, regarding Tesla, um, not just Tesla, but pretty much every company that operates in China, um, a lot of companies have been pulling out of China, and the ones who haven't, the ones who have stayed behind, have been getting hurt. Like people are boycotting them. So if we pull up like Starbucks, for example, they just pulled out of China. You can see the major drop they had when they made that decision. They've been in a downfall. I think McDonald's is another one that just recently pulled out. You can see they have just taken a major hit for it. Um, Honestly, Tesla is probably the best American company that's still operating in China uh, from a chart perspective. Tesla is like the one company that's operating in China that hasn't just completely tanked. Uh, so Tesla, I don't know, it's a little risky. I just showed you two examples where companies operating in China. What am I saying? Russia. Um, I just, China also. So Starbucks, McDonald's, they both tanked because they had to pull out of Russia. Tesla operates in China. Obviously, it's holding up a little bit better, but if things deteriorate, if they get, sanctioned or something, if they get kicked out, let's say like China is like, you know what, we're going to join Russia in sanctioning Western countries and we're going to kick Tesla out. It's a risk. I mean, I don't think it'll happen, but it is a risk. So, personally, would I stay away from Tesla right now, given the current FUD with China? Yeah, personally, I would. This is not a stock I would buy right now. Let's keep going. Is it true for all Chinese companies? That's a really good question. And the answer is yes. So the thing about Chinese companies is that the they actually make it illegal for Chinese companies to list on the U.S. exchanges or pretty much any Western exchange. So just to pull this up, I don't know if this is going to show up on the screen or not, but what I mean by VIE, I just want to explain the VIE structure real fast. So VIE is a structure that all Chinese firms use to list in the U.S. So because it's illegal for Chinese companies to list in the U.S., what they do is they use a VIE or a variable interest entity. And what that does is another company in the Cayman Islands has a bunch of contracts. And the contracts, the value of those go up and down based upon how the company in China is doing. And that's what the variable interest is. The variable interest means the interest or the value in the Chinese company varies. And this is an entity or a company that is set up in the Cayman Islands. Now, it is legal for Cayman Island companies to list in the United States. And so whenever a foreign company lists in the United States, it's done with what's called an ADR or an American Depository Receipt. And so the Cayman Islands company is a VIE, the variable interest entity set up to match the price of the stock in China. And then the Cayman Islands company is listed in the United States through an ADR or American Depository Receipt. So when you are buying any Chinese company, you are buying an ADR for a Cayman Islands company that is worth zero and simply goes up or down based upon the price of the Chinese company. And because it's a variable interest, it's basically like a derivative. It's a derivative, which means you don't own any part of the actual Chinese company. And it is true for all Chinese companies because, according to Chinese laws, it's illegal for them to list in the United States. So that's why it happens, and that's kind of how it happens. So that's what a VIE is, and that's yeah, it's true of all Chinese companies. So that's a lot of the FUD that's surrounding these Chinese companies right now. Is there's concerns with the China-U.S. relations deteriorating that China is basically going to say, okay, all VIEs are now illegal as well, and all these Chinese companies are going to have to get delisted. So that's the issue that that's the FUD that's basically causing a lot of these to go down. Okay, let's see. Yeah, this is a really good point. You never know when it's going to happen, right? Like what just happened today with the $8 billion being taken from traders. That could literally happen at any time. Will a recession start soon? I don't know what your definition of soon is, but every single indicator we have on when a recession will start points to sometime in the next 12 to 18 months, no sooner than 12 months, no later than 18 months. So that's your time frame, April to October of 2023. That is when the recession will start, based upon all of the indicators we have, which, by the way, are 100% accurate. They're 100% accurate. So you know, this is kind of an interesting point, Joan. You say you think a recession has already started. So one thing I will let you know about recessions is they're past looking, meaning we don't know a recession has started until it already started 6 months prior. We literally don't know if a recession has started until it's already been going on for 6 months. Just due to the way recessions are defined, it's 2 quarters in a row of negative GDP growth. That is GDP growth less than inflation. So that has to happen for 2 quarters. In other words, it has to happen for 6 months before we even know we're in a recession. So has a recession already started? Maybe. You know, we won't know until 6 months down the road. Let me just go through. We're not going to get into other stocks. I really want to stick to the topic of the video today. Okay, this is another good general market question. It's been more than a year. Stocks are going down. When is the bottom? How much will we suffer more? Please reply. Okay, so 2 things to this. The first thing I want to point out is it has been more than a year. Well, since March of last year, it's been about, yeah, you're right, about 1 year since the high growth, we can call them meme stocks if you want, have been going down. That is not true for the overall market. The market overall topped out in December. So it really depends upon what you're actually invested in. If you were invested in a lot of large cap companies, you made a lot of money all the way up until December of last year. You didn't start losing money until literally 2 months ago. Up until 2 months ago, you were making money. The markets hit their all-time highs in December of last year. So when we are discussing the stocks going down for a year, we are looking at a very small segment of stocks, just a handful of stocks that were these retail heavy high growth meme stocks. And a new phrase is kind of being thrown around right now, which is called a crowd stocks, meaning crowd stocks, which are stocks that the large crowd of people or a large group of people will jump into and buy. And the problem with those stocks is they just ran up way too much. They were at valuations that were completely unsustainable. Now, the real question is, how much more will we have to suffer? When is the bottom? Well, those stocks, all those meme stocks, those high growth stocks that ran up massively, they basically just came down to fair valuations. I hate to say it, but they really did. They just got down to fair valuations right now. So if we enter a prolonged bear market, especially if we do enter a recession next year, we're going to see the entire market, including those high growth crowd stocks continue to fall for the next year or two. So unfortunately, there's a chance that the bottom will not happen for another 2 years. Now, the one caveat I do want to say about that is we have some historical precedents where the stock market will actually bottom out at the start of a recession. And the reason has to do with the Fed. When the Fed starts to raise interest rates, that causes the stock market to start to go down. And when the Fed reverses and they start to lower interest rates because we enter a recession, that causes the market to start to go back up. So, very often, what will happen is the Fed will start raising interest rates, the market will drop 12 to 18 months down the road, they will trigger a recession. And then when the recession starts, the Fed will immediately reverse course. They'll start lowering interest rates, and those lower interest rates will cause the stock market to start to go back up. We've seen this in pretty much every recession in history, where the stock market fell as the Fed raised interest rates, and then the stock market went up when the Fed started lowering interest rates. So just keep that in mind. The market could very well and probably will go up during the recession. So don't think of a recession as a bad thing for the stock market. A recession starting is actually a really good thing for the stock market because it means the Fed is going to reverse course and lower interest rates. So I'm actually looking forward to a recession starting because that will mark the bottom in the market and the markets will start going back up. Okay, let's see what else we've got. Yeah, guys, unfortunately, you're right. The 2020 rally really got us spoiled, and really everybody has been spoiled for everything. If I take a look at the NASDAQ, I just want to put things into perspective for you guys because, I feel like a lot of people just don't have a good perspective on what's happening. I want to go back for a second. Let's go back to literally like what are the biggest declines of the NASDAQ? I don't even know what's going to be on it. Yeah, cool. So we're going to go back to the dot-com bubble for a second. This was the height of the dot-com bubble back in March of 2000. And back in March of 2000, the NASDAQ was trading at around $120. Let's see, it topped out. Yeah, it literally topped out at $120. It then bottomed in October of 2002. So this was a 2.5-year bear market where the NASDAQ lost 85% of its value. 85% of the value of the NASDAQ was wiped out in a 2.5-year period. Now I'm going to pull up the monthly chart. Remember this period from 2000 to 2002. I'm going to pull up the monthly chart. Okay. This is your 2000 to 2002 85% drop in the NASDAQ. You ready for this? There it is. There's your 2002. Okay. Now watch. Here's your 2008 financial crisis. So this was the big one, right? Here's your 2008 financial crisis, that little drip. Now look where we are today. Look at this. The NASDAQ has run up so much that the 85% drop looks like a dip. It looks like a little drop in the bucket, like it's nothing. So I just want to put things in perspective that this run up that we've had over the past few years is unprecedented. It cannot be maintained. It has to get back to normal. It's very possible that this is sort of like a longer term trend line, that we got to get back down to this longer term trend line. It's possible that sometime in the next 1.5 to 2 years, the NASDAQ drops all the way down to $200 or the QQQ. So we'd be looking at altogether about a 50% drop in the NASDAQ from high to low. It's possible. We have a lot of correction to get through. This little 85% drop was nothing compared to what we're going to have to go through now to get back down to normal prices. So I just want to put that in perspective for you guys. I know a lot of you guys have only been trading since, maybe if you've only been trading in the last year, Like, let me show you. This was January. This bottom orange line right here marks January of 2020, January of last year. So maybe you've been trading in this time period where you saw the market run up through all of 2021 and all of 2020 and 2021, and then you've just seen this major drop here. You're panicking, and this is a really small portion of the market. I mean, we still had the entire run up. This is the 2020 run up, 2021 run up. I mean, this massive run was just 2 years. That's it, just 2 years. And then you had a continued bull run going all the way back to about 2016. I mean, we've got, you're just seeing this really small portion of the market where you came in. Let's say you started trading in the January of 2020. You literally saw one of the most extreme bull runs in the history of the market. So anybody that just started trading in the last 2 years, you came in one of the most unprecedented times in the history of the market. I hate to say it, but you were extremely spoiled. This was a time period where stocks were doubling what seemed like every other week, where stocks were dropping 1,000%. Like that kind of run up didn't happen. Well, yeah, it happened back here in the 1999. And we saw what happened after that went back down. 1999 it ran up and then woof. So over the last 2 years, we've seen the same sort of run up that we saw in the late 90s. So we've got to get back down to normal. This unprecedented run up has got to get back down. By the way, guys, a lot of people have been really afraid. You were saying, well, it's just FUD, it's fear. I'm concerned. I'm just going to get out, and if you just want to sell everything and go to cash like me, Kevin did, I completely understand. But wouldn't it be so much better to make money? Like, this is a great time to be buying some like leap put options. Like, seriously, leap put options on some stocks that are, or even the markets overall. This is a great time to make a ton of money. There's an old saying in the stock market that it's a escalator up and an elevator down, meaning stocks tend to rise slowly and they tend to go down really fast. So this is a really, really good time to be getting some leap put options and just making money on the way down. The downfall that we just started in is it's going to be the most significant downfall since 2008. This little blip right here, possibly the most significant downfall since the dot-com bubble. Just remember the Shiller PE ratios. The PE ratios were the highest they've been since the dot-com bubble. And when the PE ratios got that high in the dot-com bubble, we had an 85% drop. With the PE ratios that high again, I'm not saying we're going to get an 85% drop, but it's possible. Every single recession, the stock market dropped below the 300-day EMA. Well, the 300-day EMA I'll just use QQQ, is 122. If we were to drop below the 300-day EMA, I don't even want to do this math. I really don't, but we'll do it. That's your 300-day EMA right there. That's a 70% drop in the market. So yeah, if we enter a bear market and we drop below the 300-day EMA like we have in every other bear market, we're looking at a 70% drop in the market. There's just historical facts. I'm not saying it's going to happen, but guys, this is a great time to get some put options and make some money on the way down. Okay, getting back to the topic, Chevron is climbing. Are you going to close your put option? So I opened a put option on Chevron because I thought the really high commodity prices, especially in oil and gas, were not going to last, that they're going to come back down, at least temporarily. I don't think they're going to completely come back down, but I think temporarily they will. Back down, say oil down around $90 or $100. And so I think Chevron's going to drop to go along with that. I think gas prices are going to go down temporarily. And so we open a put option on that. Now, I'm holding it right now. We're not closing it. I'm still waiting for it to actually drop. By the way, guys, if you want to know everything that I'm going to buy and sell before I actually do it, I actually post all of that in the VIP Discord. if you guys are at all interested in the VIP Discord, I'll just put a link up for it right here. It's stockcurry.vip/coaching. That's the URL. But over in that VIP Discord, that's where I post all of what I'm going to be doing before I actually do it. Let me, you know what? Why not? I'll just go ahead and pull up the Discord right now and kind of show you guys some of the stuff I posted. Obviously, anybody who is paid has already seen this, so I don't feel bad showing it to you guys. Let me see if I can blow this up so you can see it on the screen, because I know it gets kind of small. So this is what I posted today. So notice I didn't do any trades today, but I'm just kind of letting people know, what I'm doing. So, for example, I go through, I post, hey, this is before I bought it. I said, hey, I placed a limit order. We'll see if it goes through. And then I said, hey, I canceled the order. This is all stuff that happened that never got put on Twitter because the trade didn't go through. But I let you know when I place orders, even if they don't go through. And so then it rebounded. And then I said, okay, this one filled. That got posted because it filled on both Trade Alerts and Twitter. And then the next day I just talked about, hey, I'm not worried about the jump in the market yesterday because, as I explained in yesterday's video, the markets were still bearish. So I wasn't concerned about a one-day jump. I also talked about the CVX, and I said, CVX was down 3% the day before. So that put option went up a little bit. I was trying to decide if I was going to hold it overnight or not. I thought I might sell it because I was concerned about Putin possibly sanctioning oil. In the end, I said oil's down 10%. I talked about CVX, why it wasn't not dropping. And I talked about how large institutions were dropping it, but retail investors were buying it, which was keeping the price high. I said I was just going to wait, let it go down for a few days and let retail investors capitulate and sell at a loss. Once that starts happening, I thought CVX would tank. So that's why I held. And then yesterday, it was yesterday. But I talked about how I was at my accountant's office all day, didn't have really time to look at it. Regarding the CVX put, I said that I'm noticing more retail traders getting bearish on it and talk about selling it. So that's good news. I said for that reason, I was going to hold it. So I just wanted to show you guys kind of a little preview of what some of the information you'll get in the VIP Discord. So all throughout the day, I explain what's happening. I give my trades before I actually place the orders, and I'll let you guys know what's going on. And we talk about your trades and what you guys want to buy or sell. So if you guys are interested in that, you can go sign up for that, and that's where all the trades, all the information comes throughout the day. Okay. I see we have a Keenan Grace fan in the house. Yeah, exactly. Allegedly, supposedly, hypothetically. Yeah, ain't nobody trying to get sued over here. All right, let's see. Any other things that we haven't talked about yet? That's a good thing I don't think we've really considered. The fact that Chinese companies are investing in Russian gas companies, the fact that China's buying Russian oil and gas, could the US and EU impose sanctions on China? That's an interesting thought. I don't even want to get into that right now, but an interesting thought. Let's see what else we've got. I'm not going to say this out loud. I'll just leave that on the screen. I agree. All right, let's see what else. Sorry, guys. There's just some things I can't say on the air. We are going to end the live stream here in a few minutes. I wanted to let you know. If you guys haven't done it already, go ahead and hit that like button and subscribe. If you're on YouTube, click the bell icon and click all so that you can get notified when I release my next trade. If you're on Twitter, go ahead and follow the page. I really appreciate it. Okay, good question. Would I buy NIO on the Hong Kong exchange? Not after what I saw today. I don't trust I don't trust it. I'm sorry. There's just too much manipulation going on. And I do have Hong Kong trading privileges on Interactive Brokers, but yeah, I wouldn't. I just can't. I can't bring myself to do it. Too much risk. Too much risk. Let's see. Just looking for any last. Just looking for any last things here. Okay, let's talk about this real fast. Would a recession be good for inflation? They're two very independent things. So, inflation can cause a recession, but a recession does not affect inflation. I hope that makes sense. A recession is just it's just a calculation. It's math. It's a number on a paper. So just keep that in mind on a recession. It's just a number on a paper that's affected by inflation. But that said, the only thing that's going to stop inflation, the only thing that can slow it down, is if wage growth does not keep up with inflation and people run out of money and they're just not able to buy enough as many things as they were before, or the Fed jumps in, raises interest rates significantly, and that triggers people spending less, which in turn slows down inflation. Those are the only ways that it's going to happen. Other than that, like Janet Yellen said, inflation's just going to keep going up. So when a recession actually hits, what stocks do you buy to make money? All of them. All of them. Well, stay away from your defense stocks. So everything that ran up going into it, like your gold and your consumer goods and things like that, your healthcare stocks, you want to stay away from those because those are going to come back down. But everything else would be a buy because the market will start going back up. It'll bottom out and start going back up when the recession hits. So it's going to be like 2020 all over again. You literally throw a dart at a dartboard and make money. Let's see. If you guys pretty much been wiped out and you're just left holding, you can hold. The market's going to recover. It always does. But it might be 10 or 15 years. I mean, how long did it take the market to recover from year 2000? It took 15 years. So I don't know. How long do you want to hold? I personally, I sold, I cut my losses, and I bought put options, and that's how I'm making money. But if you want to keep holding, I get it. There's some things I'm holding still too. So I haven't, sold everything, but I sold enough to get some hedges and make some money on the way down. All right, I'm just trying to see if there's any other major things. I think we're going to go ahead and end it there, guys. I really appreciate everybody for joining, and I appreciate all the discussion and all the questions. I think this really helped a lot of guys, understand what's happening. I'll leave you with one more link if you guys want to continue the conversation. I have a free Discord. If you want to join the free Discord, it's stockcurry.vip/Discord. You can go over there, join the free Discord, and we can continue this discussion over on the free Discord. And then, like I said, if you want all my trade alerts, you can upgrade to the VIP Discord. All right, guys, thank you so much for joining. I hope you all have a wonderful night, and I will see you on Monday.